Hello, welcome to Reliable Profits for Risk-Averse Investors. I'm Britt Ryle, Associate Publisher for Ian Wyatt's $100,000 Recovery Portfolio. I've had the pleasure of working with Ian and our team of researchers to create some exciting new products for investors like you who need to make up some losses from the last year and get their wealth back on track in the current year. I'm sitting with Ian Wyatt, Editor and Chief Investment Strategist for $100,000 Recovery Portfolio. Ian?
Thanks, Britt. It's great to be here today. I'm pleased to be able to share with you my outlook for the investment markets for 2009, discuss some specific sectors and opportunities for individual investors like you to make money in this market, even though things are difficult, and get your portfolio back on track for a recovery in 2009.
It's no secret stocks have been in decline for a year and a half now, and even just this year we're down 20% or so. And pretty much we've turned back the clock to 1997 levels on the major indices.
Yeah, this has really been a lost decade, or, well, I guess lost 12 years for most investors. The markets are down, investors are throwing in the towel, there's a lot of pessimism. It's a really difficult time to stay committed to investing in the stock market after such big losses so quickly. The market has really declined so rapidly in 6 short months, giving up 12 years of gains.
And investors are sitting on such huge losses, and they don't even think that stocks can get them back where they want to be. It's definitely a bad situation for the stock market, it seems like.
Yeah, individual investors right and left are throwing in the towel. I hear from subscribers all the time about how pessimistic they are, how they don't feel like now is a good time to be investing. We saw institutional investors selling into the market late last year, back in October and November. And if you look at the current selling of the market, it looks like the individual investors really just sort of backing away and sort of saying, hey, I'm going to go put my money elsewhere, whether it's in cash or gold or U.S. Treasuries, and really just giving up. And I think that's a challenging thing for investors to do, and it's hard to stay committed, obviously, when we're sustaining losses month after month in our portfolios.
Right, and I know the most recent Michigan survey of consumer sentiment said as much as 2/3 of investors don't see any recovery anytime soon, which means they're going to be scaling back on spending and investing.
Right, and again, widespread pessimism is rampant right now, and what this means is that the market has been oversold. Any way you look at it, the market's oversold, and I really believe that a contrarian approach to investing is the way to make money in this market. Now, it's difficult to be contrarian when everybody's selling, when nobody wants to buy stocks, to actually feel like now is the right time to buy. And just because pessimism is widespread doesn't mean now is the time to start buying aggressively. But I think there are going to be opportunities out here. The market is going to move higher from this level. And individual investors who stay committed and can continue to buy stocks and bonds, even when things are difficult, will be the ones who achieve the biggest gains when the recovery happens, which it will.
So with stocks trading at such low levels and valuations so apparently cheap, but with also no real direction for the market and no belief that it might recover anytime soon, how can investors get positioned for a recovery? I mean, how are you making money in the market today?
Britt, I'm taking an aggressive approach to conservative investing. And what I mean by this is that investors who buy T-bills and put their money in CDs and money markets alone aren't going to be able to recover from this downturn. They may be able to shelter their cash and preserve capital, which is certainly a goal of investors in a difficult market like this, but they're not going to be set up for a recovery, and they're going to miss the big gains when the market recovers. Because once the market starts recovering, it'll be too late to capture the early gains. It's the investors who are investing and staying invested in the market who are going to capture the big gains. Selling at the bottom and buying at higher levels down the road is no way to certain profits.
So you think now's the time to start buying and getting prepared for that recovery?
I think now is the time to start taking a more aggressive approach, starting to look for some opportunities. There are opportunities both with fixed income and equities. I think selectively buying, sort of nibbling at stocks and bonds at these levels makes a lot of sense. I'm not saying let's go all in, let's double down. I think it's time to be conservative, but start to look opportunistically for some investments that may be able to grow in the next few months.
And that sounds good, but also at the same time, you still need to be avoiding losses, right? How are you going to approach that in your recovery portfolio?
Look, I'm definitely conservative as a whole. I mean, this is the time to stay in the bomb shelter. Things aren't good. I'm taking a very conservative stance with some aggressiveness. And so what I mean by that is, I'm currently sitting on about 60% cash. I'm 15% in equities. And the rest of my portfolio is in fixed income, both long-term and short-term. mix between corporate securities, mortgage-backed securities, fixed income that's paying healthy returns and preserving capital in this market, which is what I think investors need to do. At the same time, I am looking at some specific opportunities to make money in this market now, whether that's with mutual funds and stocks, and even some covered calls.
Right. So you're conservative now, but you're planning on getting aggressive at some point, when the market starts to show some kind of recovery or some kind of strength.
Yeah, I'm positioning my portfolio so that when things turn around, I'll be in a position to, first of all, start investing more aggressively once I see that trend start to unfold, and at the same time, have some skin in the game right now, so that if and when things do begin to improve, we'll be there.
So given that where the economy is at right now, do you think there's any chance for recovery in 2009, Ian?
I think things will improve. If you look at how quickly the market has fallen, like I said earlier, it's easy to look at this and think that the market is oversold. Does that mean that this is the bottom? I don't know. The recession started back in December of 2007. Most economists think that the recession will end sometime in 2010. And we know historically the markets tend to bottom about the midpoint of a recession. So, if you look at the data, it looks like we could be about at the midpoint of this recession, and the behavior of the stock market appears to look like a bottoming process. That said, I'm not going out and aggressively buying stocks today. I think now is the time to take a conservative stance and, with some aggressiveness to make sure that when things turn around, we're ready. And that's exactly what we're doing in the recovery portfolio.
So we know investors don't want to miss the recovery in the stock market and the opportunity to make some money on the way back up, but at the same time are pretty terrified to be putting money into the market right now, because it is a little bit scary, to be honest. Ian, tell me how your recovery portfolio can get people in position now to take advantage of recovery but still protect their losses.
Exactly. My new service is called the Recovery Portfolio. My wife and I have taken $100,000 of our personal funds and are investing it in the market today. We're looking at fixed income and equity opportunities and taking an aggressive approach to conservative investing to help recover from the losses sustained in 2008. Through this service, I'll show you exactly what trades I'm making in the portfolio so that you can duplicate the same trades in yours. I intend to grow this portfolio from $100,000 today to over $250,000 in 5 years and over $500,000 in the next decade, resulting in an annual growth rate of over 17%.
So how can investors benefit from what you're doing in your own personal portfolio?
Well, Britt, I'm showing investors exactly what I'm doing, and I think that's the key aspect of this service is there's 100% transparency. Individual investors who subscribe to this service see exactly what I'm doing in my own investments, which is, like I said, taking an aggressive approach to conservative investing. Now isn't the time to be jumping into the market with both feet, nor is it a time to be hoarding cash and gold and sitting on the sidelines.
The Dow Jones Industrials are now trading below 7,000, really back to 1997 levels. And investors are pretty much throwing up their hands at the very bottom, or what may be the bottom. They're buying CDs and gold and pretty much hoarding cash. So what are you doing with your personal investments to make sure that you're in place for when the recovery does arrive?
Back in 2008 and October, November, I actually was selling some equities in my portfolio. I too was caught off guard by the depth of the decline in the market. And so what I did was, in January, I decided that things looked like they were going to be improving, that this was going to be a year of a recovery. And I decided to take that $100,000 and put it on the line and show individual investors exactly how I can take this money, put it in a portfolio, and begin recovering from the downturn of the stock market.
Which you started doing in January, right? Was there anything in particular about January that made you think now was the time to start, getting back into the market, putting some money to risk?
It was the beginning of a new year. The markets had fallen so far, so fast. I really believed that the recovery was going to happen in 2009, and this was the time to begin selectively buying equities and fixed income. The opportunities that exist today are unprecedented. The market's clearly oversold, and I felt like now is the time to be taking funds that my wife and I had set aside and actually start investing in the market to try to position ourselves for gains in 2009 and beyond.